Financial Fix on the PIX11 Morning News is brought to you by Ridgewood Savings Bank. Multiply the good.
All right, looking for additional deductions to help you get more money back from Uncle Sam? We all are, right? Well, financial advisor Ken Mahoney is here this morning and has the lowdown on what you can and cannot deduct. So good morning to you.
Good morning.
So let's talk first off about sales taxes, because you're saying there's a lot of information we need to know about that.
Yeah, a lot of people don't know you could write that off, your state sales tax. So let me give you an example. Let's say last year you bought a car for $30,000. State sales tax is pretty high. That's 8% or $2,400 you can write off in your federal taxes. But it doesn't stop there. Think about the groceries you spent, all of those receipts that you have. Dan, you have those receipts?
I think so.
No, you probably don't have those receipts. But guess what? The IRS has an estimator. They're kind of kind. You can go on there and say, hey, what's my state sales tax estimation for 2016, and write that off in your federal tax return.
Okay,
it's probably thousands of dollars.
Everybody is always asking about the charitable donations.
Right,
so many people make them, so how do you write those?
So out-of-pocket charitable donations, let's say you go to a walkathon, you're actually doing something pretty cool. Basket goes by a church, $20 here, $40. Keep good records, and you can write it off. Always have to keep good records.
Because you don't necessarily have receipts for all of those.
No, but keep good records that you were at this walkathon, so to speak, for a charity, that you gave some money to Salvation Army, all these type of things. Keep a receipt with that.
All right, let's talk about child care deduction. So many people are listening to this one.
Okay, exactly. It's up to $6,000 this year. It's more. And by the way, it's actually better than the deduction. It's a credit, dollar for dollar. So at the end of the year, let's say you don't owe the IRS money, they don't owe you money, and you have $6,000 credit, the IRS will send you a check for $6,000.
Really?
So really look into child care. That's a big deduction that people miss, and it's a credit, not a deduction. Better than a
Okay, that's good to know the difference between the two. So dental and medical bills, can you write those off?
Yes, certain conditions. You have to be over a threshold of 10% adjusted gross income. If you're over 65, that threshold is lower, over 7.5%, and you can write that off. So if you spent a lot of time in dentist chair last year, look at those expenses and see where that applies.
But what about your co-pays?
Co-pays, yeah, that counts also.
Okay. Job search costs. So many people out there are looking for jobs this year. You're talking about travel expenses.
Yeah, so 2016, let's say a job transition. So all modes of transportation, planes, trains, automobiles, you can write off. Also the prep, resume prepping, any type of agency fees, all those type of things to land a new job. But by the way, it has to be in the same industry. They're sticklers about that. Stick in the same industry and you can write those off.
And just real quick, we only have about 10 seconds. Here's the things on your screen right now, everybody, that you cannot deduct. Dry cleaning, work clothes, giving to friends and family, pet care.
No pet. Listen, the IRS is not pet friendly.
All right. Ken Mahoney, thank you so much for coming in this morning. We're going to have a full list of what you can and cannot deduct on our PIX11 app. Thanks again. The time right now is 6:59. The news at 7 begins right now.